back. You're watching Indian Open right here on Bloomberg Quint Live. Asia as a pocket is looking weak. Last week itself was a bit of a drag for the Indian equity markets. Friday's session bogged down by what the banking sector did. 2% plus cut for the Nifty Bank, and a lot more riding on today's trade with what HDFC has reported and the kind of commentary that's come out from HDFC Bank.
Yeah, so the two biggies, HDFC Bank and Reliance, and boy, if the markets needed them to deliver a blockbuster quarter, it was now. Sadly, it isn't a blockbuster quarter, so let's wait and watch. We'll start off, well, if the SGX is to be believed, Avinash, sub 11,400.
Yeah, the rest of Asia too looking extremely weak. But what does this do with regards to the setup from the futures and options space? Have those key levels changed? Has the distribution changed for the worse on the downside? Let's find out all of that from Navneet. She's joining us right now with the update. Navneet, good morning.
Good morning, Devina, and thanks for that. Well, definitely the base for the market has been shifting lower with the correction that we've seen in the last two trading sessions. The close to the week was not great, and SGX Nifty is also indicating that the start may not be as great. So for Nifty futures, remember the markets are shifting lower, but there are no fresh shorts that are coming up, at least on Nifty or on Bank Nifty futures. On Friday, we did see open interest going down by 3%, and the futures closed with a premium of about 2 points. And similar was the case for Bank Nifty, which did fall significantly, and OI shed was about 12.5%. That's telling you maybe the long positions that were created that are beginning to get unwound as the markets grind lower from here on. And volatility index, which has been at good levels, at least comfortable levels of 11 to 12, that also spiked on Friday. That was up about 6.5%, but still 12.5 is not a very high level for India VIX. The put call ratio, that's the Nifty PCR, that fell to levels of about 1.04, telling you that there was more call riding which was coming in the system, and that will be visible when you look at the options data. First, look at the distribution. The maximum open interest on the call side is at the 11,300, and on the put side it is at the 11,000. On the call side it's 600, on put it's 300. So probably that's the range that we are getting. That's the open interest distribution for you, 11,700 and the 11,300. In terms of change, there was a lot of writing which came in for 11,500 and 400 call strikes. In fact, 11,400 put strikes saw some amount of OI addition, and unwinding was seen for 500 and 600, telling you when the markets move lower, the call writers did see some bit of unwinding also coming by. Going into today's session, let's tell you which are the stock futures which will be in focus. There were fresh long positions seen for SRF in a weak market that was up about 1%. RBL Bank fell after the commentary which came post the earnings, that was down 14%, and fresh shorts were seen here. Amara Raja Battery, remember both the battery makers were down on Friday, and this one also came out with the numbers, by the way, on Saturday. Margin expansion of 300 bips. Let's see if there is any sort of recovery which comes by. And lastly, Tata Elxsi is out of F&O ban, so let's see if there is any sort of recovery which comes by, though on Friday the stock touched fresh 52-week lows. Quickly, I just want to take you through the FI data. On the index futures, there were some fresh bets seen on the short side and unwinding on the long side. And even on the index options side, there were more bearish bets which came in from the FI side. Almost 21,000 contracts added on the put long and 22,000 contracts added on the call short side. Back to you guys.
Right, Navneet, thanks very much for that. So that is the setup as we step into trade this morning. Bringing in Avinash Gorakshakar, he's the head of research at Joindre Capital Services. He's here with us to take us through his understanding of how trade could shape up, keeping in mind the kind of earnings performance that we've seen over the weekend. So the big one, obviously the two big ones rather, Reliance Industries and HDFC Bank. What do you think is going to, attract more eyeballs this morning, considering the way banks have been doing so far?
No, I think clearly, from a stock perspective, I think HDFC Bank, the commentary was definitely cautious, and I think markets were expecting a much better beat in the sense that they had called a meeting for the first time for an interim dividend. I would believe that I think going forward, markets would be extremely cautious on the asset quality side here. And I think if there is a letdown in credit offtake, I think it could be possible that we could see a little bit of elevation on the asset quality side. I think markets could possibly not give a very big thumbs up to this kind of performance. It's more of a neutral show, and I think the commentary definitely sounded a bit cautious. As far as Reliance is concerned, I think markets were expecting a weak number. Largely, other income was the main factor which drove the profitability. But I think Jio, which is one of the main growth engines, also disappointed this time. I think if you see the ARPU number, Reliance actually reported a drop in their ARPUs. So I would believe that, you know, both these stocks are not likely to show a big bump up today. I mean, in the near term, I think markets would obviously be looking at how the next coming 1 or 2 quarters pan out. But overall, I think it's going to be extremely difficult. If HDFC Bank, you know, shows some sort of cautious commentary, I think it clearly means that there is considerable amount of stress in the system.
But for a bank which is trading with such heavy premium to the rest of its peers, I mean 3.7 times book, in a market environment where the only option to invest was anything that had the name HDFC in it. Now that is being challenged. So how would that you know, prove to be from a stock perspective?
No, I think clearly, you know, I think even the toughest of the stocks have taken a beating, Devina, and I think it's obvious that, you know, with this kind of number, you are definitely not going to see a strong buying momentum coming in the stock, at least in the near term. Our sense is that at best, you know, this stock could possibly be a market performer, and to that extent, you're not going to see any big re-rating coming in. I would not be surprised that not many, you know, institutional broking guys would also go out and re-rate this stock at the current odd level. So you're going to see a lot of pain in the near term. The stock is definitely expensive, and I think now with this kind of number and commentary, it's going to be a tough call. I would suggest that, you know, at best, you know, somebody who's holding on can hold on, but fresh commitment, I think at these levels would be a little risky.
Yeah, I think that says it, but that point is well brought out. Not that we want to discuss HDFC AMC, but Devina mentioned how the last solace seemed to be the HDFC brand name. Look at, even in such a dull market, what that stock did in Friday's session, 6.5%, 2318, quite stellar really, the moves into the HDFC AMC, or even HDFC Life, I think has been holding out reasonably okay compared to the rest.
Yeah, AMC was actually up about 20% over the last 7 days. So in 1 week's time, when the rest of the market seemed to have lost all hope, it was HDFC AMC which saw bulk of that money coming in. The stock 20%, as you can see, on the last 7 days. But we'll discuss HDFC AMC and the other few stocks in just a few moments. Lots more to discuss in terms of the plethora of earnings that came out, and also Indigo, record performance for the counter amidst whatever has been happening at the promoter level. Does that give any relief, Somit, to the counter?
Well, it might actually. If you see the company's revenue and net profit and EBITDA, it was a strong performance coming in from all the company on all the fronts. Now, if you see the headline numbers for Indigo, the revenues of the company were higher by nearly 45% to close to 9,400 crore rupees. The EBITDA came in higher at around 233% to close to 2,650 crore rupees. Margins came in higher at 28.2%, while the net profit reported by the company was the highest ever quarterly net profit of close to 1,200 crore rupees. Now, it was a strong quarter on the back of strong yields, lower fuel cost, high passenger growth, higher other income, and foreign exchange gains that the company reported. Now, if you see the company's yields, they were higher at around 13% to close to 4.08 rupees per kilometer per passenger. Now, on the cost side, if you see the fuel cost per seat kilometer, now that declined by nearly 12% for the company at close to 1.34 rupees. Now, this is the biggest drop reported by the company in the last 12 quarters, and this was on the back of lower ETF prices and the fuel-efficient aircrafts of the company. Now, the cost excluding fuel, that also reduced by nearly 2.8% to close to 2.11 rupees per kilometer. Now, this was the biggest drop reported by the company and the first drop reported by the company in the last 8 quarters. Now, other income, that was higher by nearly 20%, while the company reported a foreign exchange gain of close to 45 crore rupees as against a foreign exchange loss in the last year of close to 246 crore rupees. Now, during the quarter, the company added nearly 18 aircraft, which took the total fleet count of Indigo to close to 235, while the company plans to increase its capacity by another 28% in the second quarter of financial year 2020. On the balance sheet side, the company's total cash balance increased by nearly 13% to close to 17,300 crore rupees, while its total debt, excluding the capitalized lease, decreased by nearly 3% to close to 2,400 crore rupees in the first quarter of financial year 2020.
All right, Somit, thanks very much for that. So, can anticipate some bit of a relief for Interglobe as we open up. Since we're on the earnings topic, Darshan, the other earnings that came out.
Yeah, so L&T Finance came out with numbers after market hours. What has happened is the NII is below estimates, while the profit came in line with what was anticipated. The management has said that they are defocusing on structured finance as well as debt capital market at this point of time, and narrowing their focus to rural housing and infra. The other part is L&T Technology Services, also a weak set of numbers. They've revised revised the FY20 guidance, revenue growth guidance to 12 to 14% from the earlier 14 to 16%. And the revenue growth was hampered by slowdown in spends in telecom and high-tech services. And the management expects this weakness to spill over in the second quarter. Mahindra CIE reported earnings below estimates. The revenues were up 3%, while profit was down 9% and EBITDA was down 7%. Among the strong numbers, Amara Raja Batteries revenues were up 2%, profit up 25%, and EBITDA at up almost 27%. The results are above estimate. That was helped by softer lead prices and strong replacement markets. The Nomura is saying that the margin will sustain on lower lead prices and favorable mix. And Morgan Stanley is also bullish. They are saying that the underlying volume trends were strong in the auto replacement segment and as well as the export. ICICI Lombard results were in line with estimates. Gross direct premium income dropped on account of discontinuation of the crop insurance, but overall the numbers were in line. Avanti Feeds revenues up 5%, profit up 12%, and EBITDA was up 3%. Kirloskar Pneumatic as well as Future Lifestyle, both of them came out with a decent set of numbers, so probably should react positively.
All right, those are for some earnings. What about some other stocks in US, Michelle?
Yes, lots of stocks actually that we need to look at today. The first on my list is Tata Steel. The company plans to raise $600 million for refinancing, and they're not looking for a JV partner in Europe after a deal with Germany's ThyssenKrupp has collapsed. This was reported by Bloomberg. Then we have IOL Chemicals and Pharma. They've made a prepayment of 15 crore rupees due to banks on July 19th. Also, they've totally prepaid 84 crore rupees worth of loans to reduce debt of the company. Then we have Grasim Industries. The board of Aditya Birla Idea Payments Bank has approved the voluntary winding up of the company as unanticipated developments in the business landscape has made the economic model unviable. Pharma inspections. Strides Pharma announced a successful completion of the US FDA inspection at its flagship facility in Bangalore, while Cipla says US FDA inspection at the company's facility in Virgonangar, Bangalore has ended with 7 observations. Then let's have a look at the air passenger traffic for the month of June. Industry passenger growth stands at 6%, which is the highest in the last 5 months. SpiceJet's market share is at 16%, which is close to its 5-year high, and passenger growth is at 37%, while for Indigo the market share stands at 48%. It's fallen from its peak of 50%, and passenger growth is at 24%. Lastly, let's have a look at the National Housing Bank circular. Now, as several complaints were received with regards to subvention schemes and alleged frauds by developers, housing finance companies are now advised to desist from offering loan products involving servicing of the loan dues by builders, developers, etc. on behalf of the borrowers. Morgan Stanley says additional business headwind for stressed or weak developers.
All right, guys, thanks very much for that. So that's a whole host of stocks you need to keep an eye out on. And obviously, Avinash, I want your comments on this National Housing Bank circular. But before that, I want your take on Interglobe Aviation and SpiceJet, which has actually started to gain a lot of traction, not just on the stock price, but as you saw, the passenger traffic control numbers, their market share has gone up, their passenger growth has been much higher than Interglobe Aviation. So how would you pit these two?
No, I think numbers from Indigo were definitely in line with expectations, and I think this was a kind of a bumper quarter. Our sense is that hopefully crude prices settling down and air traffic the way it is growing, our sense is it could possibly emerge a much more stronger player in the coming 1 or 2 quarters. Our sense is that with crude prices settling down and now with jet almost out of the system, you are going to see a lot of market share gains happening both for Spice as well as Indigo. Spice definitely would also gain, but geographically I would believe that Indigo still remains in a much better, sweeter spot. Their cost management is far better. And I would believe, apart, if one were to leave the promoter kind of issues, on a fundamental basis, Indigo definitely stands out. I think the markets were clearly unhappy to know some sort of, problems with the promoters, and that actually impacted the stock in the near term. But I think with these kind of numbers, I'm quite sure you could see a reasonable amount of good bounce based on these numbers, and the core business continues to do well. That is very important. So I think hopefully if the management tussle is going to end sooner or later, I think that would definitely mean that the stock could get re-rated very soon.
Just keep in mind that the growth in passengers was very strong for SpiceJet, not the others. Indigo has said that Q2 will not see any kind of positive tailwinds from the jet issue. And crude just a bit of a spike today because of the tensions between Iran and the UK. So 2 or 3 factors that you got to keep in mind. But Avinash's point is well taken. The numbers, a solid display. Let's wait and watch what happens to the stock today. We'll talk more about some of the others. RBL Bank cannot talk about that. L&T Tech, the numbers, the way they have come out and the guidance revision. But before that, let's get in our technical experts on board. Ruchit Jain, technical analyst at Angel Broking, with his thoughts, as is Brijesh Bhatia, head of research at Dealmoney Securities. Gentlemen, both of you, good morning. Thanks much for joining in. Brijesh, we'll start off sub 11,400. What's the trade that you would initiate on the Nifty this morning?
Morning, Neeraj. I would slightly wait for a break of 11,385 for a couple of reasons. So if you look at the Friday session, stock index managed to hold 11,399 and ended above 11,400. Second is we are witnessing some unwinding in 11,600, 500, and now if you look at the puts, the 11,500, which was holding quite strong OI, shed, and now the structure has moved to around 11,300, 11,400.
All right, I think we've lost Brijesh's link there. I'll try and patch that line back. I think he's back now. Brijesh, I'm sorry we missed out a part of your comment there. Could you just start over?
Okay, yeah. I would wait for a break of 11,385. So if you look at the Friday session, 11,400 was quite strongly held and managed to hold close above the 11,400 on weekly basis. Plus, if you look at the OI structure, 11,500, which was holding a strong open interest, we have seen unwinding over there and shift to 11,400, 11,300, 11,200. So I think 11,000
slightly back.
One can look for a short opportunity, keeping a target of 11,280 and keeping a stop loss of 11,431.
Okay, Ruchit, your call for the day.
Yeah, very good morning, everyone. Well, after a pullback move, we have seen that in last couple of trading sessions, the market have again resumed its short-term downtrend. So there's a low top, low bottom structure which can be clearly seen not only in Nifty and Bank Nifty, but in most of the other indices as well. So short-term trend continues to be negative. The target projections, as per some of the retracement theories, are coming around 11,300, where even as per the options data, there is the highest open interest as of now. Even in Friday session, we saw the 11,500, 11,600, all the call options have witnessed significant writing. So I think that by the end of this before this expiry day, we would see the index testing this 11,300 mark. So at opening itself, I would recommend going long on 11,300 put option, keeping stop loss below 9 rupees, which is currently quoting around 27 rupees, and expect target around 125.
Okay. Before we get to specific stocks, it's time for our special segment, Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, good morning. What's the stock on our radar today?
Morning, Neeraj. So we are looking at Avenue Supermarts, and there's a negative sell signal coming in on the counter, and we're using the ADX or the DMI indicator for the purpose of that. But before we start, let's first try and understand what the ADX indicator is and how do you interpret it. It is basically a directional or a movement showing a trend following indicator, and it determines the strength of a trend. How does it do so? It uses basically the relative highs and lows over this previous trading session to compare how the trend has been moving. Coming back to the price chart, I would like to highlight the fact that the lower panel, which is the DMI the indicator, there we have seen a negative crossover. So the red line over here, that is the minus DMI line, that has crossed above the green line, which is the positive DMI line. So there has been a crossover that has happened. The white line that you see, that is the ADX line. That basically shows the strength in the trend. That too is above the mark of 20. Typically, a value in excess of 20 shows that the trend is on the higher side, which with the negative crossover indicating that there could be substantial enough weakness in the counter. Coming back to the price chart again, I want to highlight the fact that around the mark of 1465 there was a double top sort of a formation. Post that, we saw 2 days of corrective move. Yesterday it had fallen more than 2.5%, and with that, if you move on to another chart, we notice the fact that the 200-day moving average, which is the simple 200-day moving average, that too has been taken down. So the pink line, which is over here, that is the 200-day moving average. It has crossed below that, and historically, whenever that has happened, thrice in the past, we've seen that the stock has corrected significantly.
Okay, so the past history is depicting that this works very well. Yash, thanks so much for putting that into perspective. Very quickly, before we get in a banking analyst, quick, since we are talking about charts, quick technical ideas from our experts. Brijesh, to you first, your top ideas for the day.
I would take over from Yash, and the FMCG space is, I think, good short bet looking at the momentum. So I would go short on Marico, a future at around 366, 367, and look for the target of around 351 on the downside with the stop loss of around 373. Second would be on the long side on the Reliance Nippon. So if you look at the stock, it has 6-7 weeks ago, it has broken out of its bullish pennant, and it consolidated for nearly 3-4 weeks, and in last couple of weeks we have seen again a good momentum picking up. So I think our Reliance Nippon at around 227 can for a long opportunity, target of around 252 on the upside, and stop loss can be placed at 215, which was around 6 weeks low.
Ruchit, what about you?
At first, just a small correction on my index strategy, which I had spoke about. It was 11,400 put, which I intended to give. So traders can buy 11,400 put and not 11,300. The closing was around 54 rupees. Keep a stop loss below 9 for target of 125. Now coming on to stock specific ideas, since the momentum is clearly negative, I have two sell ideas. First is a sell call in Sun TV. This has already been an underperformer in the recent past. Even when there was a pullback move in the broader markets, the stock was forming a lot of low bottom structure, which is still continuing. So one can go short on Sun TV with stop loss above 473, expecting target around 440. And LIC Housing Finance has breached its immediate previous low support of 526. So we expect this correction to extend towards its next support level, which is around 505. So 520 put can be bought of LIC Housing Finance for target around 17. It is now quoting around 5.5 to 6 rupees.
Okay. Gentlemen, stay on with us. Lots more to discuss with you. But HDFC Bank and RBL Bank have both made higher provisions in the June quarter, while HDFC Bank witnessed a deterioration in its retail book, particularly in the agri segments. Its younger peer, RBL Bank, sees pressure from some of its corporate accounts in the coming quarters. Are these asset quality pressures specific to these lenders or a larger trend at play in the banking sector? Let's put all of these questions to Ravikant Anand Bhat of IndiaNivesh Securities, who's joining us on the phone line right now. Ravikant, obviously, while not looking at the numbers per se, but the commentary that both of these banks managements have made has been slightly of a bigger concern right now for even someone who's looking to invest in a marquee name like HDFC Bank.
Well, yes, I would agree that the management has sounded caution. And so, I mean, if you want to just segregate, I think as far as agri is concerned, we know for the last 8 quarters that this is going to be an on and off pain point. It keeps emerging every alternate quarter. So the expectation is the agri stress would subside in second quarter, maybe re-emerge in third quarter, and again subside in the fourth quarter. So this is a bit of a seasonality, given the fact that HDFC Bank has started originating its own agri loans since quite some time now, and so this is a given. I think this is expected. I think the other part actually was the management really sounding caution. So they were categorically saying that they haven't really stopped lending to certain segments, but they are definitely watchful. Two, there indeed was a slowdown, and I think if you look at the retail loan numbers, they were slower than the headline growth number, and that definitely is a bit of cause of I won't say exactly worry, but given that HDFC Bank is the market leader, and one would expect them to still stay ahead of peers in grabbing market share. But still, there is a slowdown, particularly driven by the vehicle segment, and fine, but the passenger vehicles has slowed down, and that definitely is affecting the loan growth. So I think so that's a point which you definitely cannot miss. We are still expecting that this would be made up by the corporate side as we move into the year, because there was runoff on the wholesale side, and that also did affect the loan growth. So let's say, in the second half, the loan growth should be better.
The interesting part now is that all up until now, we'd seen the corporate book failure. We'd seen some of the larger corporate accounts giving way. Now we're starting to see stress within the retail books as well. So do you feel that this could be the unraveling of the NPA cycle within the retail loan book?
No, I don't feel that, there could be a big unraveling as far as the retail loan book is concerned. So clearly, if you look at the RBI data, we have certain parts like credit cards going quite robust, in a quite robust fashion. So obviously, there are a lot of consumer spends over there, and given the fact that select banks are major acquiring banks, card issuing banks and acquiring banks, you tend to be watchful with this. But still, we have come a long way in the last decade and a half, and the CIBIL data does provide, a strong comfort, coupled with the fact that banks have their own. So I would be selective. I would, to HDFC Bank, I would still be inclined to believe that there's not going to be a major unraveling, except the fact that, if you're talking of agri as a part of the retail, then yes, they're having certain pain points, and those will continue. I think at least a year ago they had said that they will no longer be in the sweet spot of 90 to 110 basis points gross NPS. That has gone away. So, ideally one should expect HDFC Bank to stay in the, 140 basis points gross NPA range.
Okay.
Now the expectation is this really does not go beyond 150 basis points. The last time they were
Ravikant, I'm sorry, I'll have to interrupt you there, but I get the mood point. We're just away from pre-open, 7 seconds away. Thank you so very much, Ravikant, for joining us this morning. But pre-open right now, 1/3% under for the SGX Nifty. Nifty 50 opens up with marginal gains of about 1/3%, with Sensex trading higher by about 1.5%. Very volatile in the initial few minutes, so not going to take it on face value right now. Wait for it to cool off and consolidate a bit more. Individual stocks then, and starting off first with SBI, which is gained about 2.5%. Reliance Industries moves up. You've got JSW Steel 1.9% higher. Hindalco is up 1.4%. Coal India, Tata Steel, Eicher Motors is up 1%. ONGC and L&T also more than 0.5% gained in today's session. Yes Bank makes a slight bit of a comeback in today's pre-open trade, but very marginal, could flip into the red at any point. Amongst the losers then, IndianOpen Bank takes a knock of about 2% in pre-open. Cipla, BPCL, Bharti Airtel, Bharti Infratel, and some of the other oil and gas majors are seeing some bit of a decline at pre-open. The currency weakens. 68.8 was the close on Friday's session. 69 is where you've got a trade right now on the rupee versus the dollar. The broader market space also looks slightly weaker at pre-open.
Yeah, it would. RBL Bank continues to grind lower. At least the pre-open rates show a substantial downtake. Let's wait and watch. Okay, now changing. So let's give these rates a bit to stabilize. How about the result reactions? Mahindra CIE, the numbers were sub-estimates. Let's see what that is doing in the session today. Then Interglobe Aviation, that's starting off 5% lower likely. Interglobe Aviation and SpiceJet, Indigo for the results as well. I don't know if it'll a 10% uptick, but the numbers are very rock solid. Let's wait and watch if it reacts accordingly. Avinash certainly bullish on that. SpiceJet, the passenger growth numbers for the month of June very, very strong. Let's wait and watch if that stock were to react like this. Remember, it's been standing rather tall the last few days. Future retail, the numbers weren't the most impressive. Let's see if that is reacting how in the session today. Likely to start off lower again. And two numbers that I thought stood out really well. Amara Raja, Kirloskar Pneumatic. Amara Raja may be trading. Let's just see if it's reacting positively to those numbers. It's very rare to have auto ancillary names do well these days, but this looks like it is starting off okay in the session. Okay, so 3 or 4 names that you need to monitor in the session today. Before we get to the fundamental conversation there, just a quick perspective on RBL Bank, Brijesh, Bhatia. What are we doing there? I mean, how would you trade this one today?
I think one can look for short opportunity around 510, 514 zone and keeping a strict stop loss. I would say strict stop loss because stock is slightly in the volatile zone now. So strict stop loss would be around 527. I think 470, 460 could be on cards in short term on RBL Bank, where I think a strong support could be seen around 450. So I would suggest book profit around 460, 470 in case looking for a short opportunity.
Okay. Well, we'll talk about this as well as Bandhan Bank with Avinash Gorakshakar, but those earnings have surpassed estimates. Bandhan Bank's earnings, that is. Profit jumped nearly 50%. But in terms of segmental performance, CASA growth seemed to be tapering off. On the asset quality front, numbers remain steady, including the exposure to IL&FS. Shefali had a chance to chat with the MD and CEO, Mr. C.S. Ghosh. Listen in.
Our gross NPA 2.02%. And if I exclude the IL&FS, it is in 1.11%, is in gross NPA. But if we go to the net NPA, 0.56%.
Okay. So, sir, is your IL&FS exposure, is that fully provided for?
Yeah, we already provided in the last September.
All right. So, sir, moving on from the basic numbers that you told us, I want to understand your CASA growth a bit. So, it has come in at about, the CASA ratio now stands at about 36.06%, which is down 465 basis points on a sequential basis. So, what is the trend that you're observing? Are you also moving towards term deposits like some of the other banks are doing? Also, in the press conference, you said that you're getting good CASA accretion in the central and western regions of the country. So which are the focus regions for you going forward? And also, if you can help us with an outlook for your CASA growth for FY20?
See that the CASA growth is the bank, we are performing good on that. If you see that the earlier also, we are always, it will be like the 35 to 40% is lies on that time to time and quarter on quarter basis on that. So this is in one part. Second part is there, because of that, the customers are getting the fixed deposit rate is better now, and they are feeling that in the future it will be maybe again rate cut will come down, and they are also like to not get that much. So that they are little bit, some of the customers feel that they are savings been transferred as in TD, so term deposit. And we also encourage sometimes on that because we have need in a long term some of the fixed deposit when the growth will be finally March, we have need that amount of that. For that reason, it is now coming on that, but it is good for us also.
Sir, for FY20, what would be your guidance when it comes to loan growth and deposit growth?
Growth I cannot be guide. But what I saw that in the last 3.5 years in the banking industry, the deposit growth is not in a big issue if I have that a good number of banking outlets in a rural and semi-urban. And if I have a good number of people who can be drive and reach to the customers' doorsteps to provide that service, so growth is not an issue. So Bandhan is going on that angle. And second is a credit point of view. The small ticket is a big market. If it is say that microcredit, if we say that the MSME, if we say the affordable housing, there is a good market in our country. So, but if it is like to reach in rural and semi-urban, that will be the more advantage to get on that. So I am feeling that the industry, banking or Bandhan, so we are focusing on that rural and semi-urban where Bandhan is a banking outlet 71%. I hope that the future growth is not any challenge in any amount.
So one last quick question, if you can help us with the timeline for the merger and also for the reduction of the balance promoter stake.
That is in first we will like to finish my merger. No, it will be now under NCLT approval. Already the Ahmedabad has been completed it, their shareholder meeting. So NCLT will be give the report soon. And our NCLT meeting, NCLT called the meeting for shareholder on 30th of July. I hope that after that they will be also give the report. And we are prepared, our team, how we can be, our team and Grow team working together to preparation, all the things. So when the final approval will come, we will drive on that. And that is a one side, we will get the opportunity, 61% of the our reduction will come. After that, we will be again start to the next process. Strategically, we like to comply with the RBI.
Well, that's thanks, of course, to the management of Bandhan Bank for talking to us. That stock is holding out okay because, frankly, in a time when a lot of financial names are not coming out with great numbers, Bandhan Bank has managed to do that. Avinash, quick words. We discussed HDFC Bank already, Bandhan results, and a quick view out there on RBL Bank too. What do you expect the stock to do here on?
No, I think as far as RBL Bank is concerned, I think we could see a little more downside, considering that this kind of negative surprise was definitely not expected. I think the unsecured book, loan book, is going to be a key pain point, Neeraj, in the near term, and I think that is going to be a key watch kind of area for most of the analysts. And I would not be surprised that we could see some pain at least for 1 or 2 quarters. As far as Bandhan Bank, at least the overall operational metrics seem to be quite solid. I think a 39% growth in the AUM. What the market probably is a little worried is a over dependence on the Eastern India market, and as ticket sizes of loans increase, there could be some stress coming up maybe in the next 1 or 2 quarters. But I think overall the numbers seem to be quite good. The management seems to be confident, but I think overall, the management is making all points visible that small ticket sizes is where their foray is. So I would believe that yes, as compared to RBL Bank, maybe Bandhan Bank has managed the show pretty well up till now. But overall, I would believe that until and unless they do reduce their exposure on Eastern India gradually, only then I think one could see a larger part of the re-rating coming in. But overall, RBL is going to definitely face the bigger brunt of the stock price fall in the near term. Bandhan Bank could at best be a market performer, at least in the near term.
Just a quick word, Brijesh, Bhatia, and I'm not going to come to you with a Bandhan or an RBL, but the other two, DCB and Federal also, which had a rough ride last week. They reported their numbers, but did you see some technical weakness that could prompt further selling into a DCB and a Federal Bank?
If you look at the Federal Bank, it was back the levels which is quite strongly holding around 90 to 93 levels, and if you look at the 200 days, which has now shifted to the higher level of around 95. So in case those levels sustain around 95 levels, 91, 95, I would look for a long bet on Federal Bank rather than looking for a short opportunity, and I expect back to 105, 108 levels, keeping a stop loss of 90, which was the previous support zone. Coming on to the DCB Bank, I think the selling pressure which we have seen last week in Thursday's and Friday session, I think they might take a halt on the selling pressure. And if you look at the strong support, stock is already trading around 200 as average, 184, 186 stands out to be a very, very strong support. In case those are not broken down on the convincingly the momentum, I think stock might go into consolidation, and I would wait for rather back to 200 levels to go long or short below 180.
It's astounding the kind of losses that DCB and RBL Bank have made in just one quarter's performance. It just shows that how vulnerable some of the small banks would be, even if they're high quality names. Minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, an excuse from Reliance Industries as net profit was aided by higher other income. Low refining and petrochem margins hurt profitability, but the newer businesses, Jio and retail, did much better. The stock flat in pre-open.
HDFC Bank goes a bit off color as asset quality worsens marginally in Q1. Softening credit growth was led by moderating auto loans and rundown of a few corporate assets.
But Interglobe Aviation flew high and strong in Q1. The airline reported the highest ever revenue, EBITDA and net profits. But the management does not expect any meaningful positive impact of jet to continue in Q2.
In other earnings, weak quarter for L&T Technology Services, L&T Finance Holdings and Mahindra CIE Automotive.
While ICICI Lombard, Avanti Feeds, Amara Raja Batteries, Kirloskar Pneumatic and Future Lifestyle clock in a strong run for the June quarter.
Lastly, keep an eye on home financiers and realtors as National Housing Bank calls for restraint from financing subvention schemes. This means additional business headwind for stressed or weaker developers.
Well, let's wait and watch. We'll be speaking to one of the managements at 9:30 with regards to this, so do stay tuned for that as well. But stocks which are starting off lower in trade. Ruchit, Jain, quick thoughts here. Mahindra CIE, doesn't come usually in conversations, but stocks look weak because auto components are looking weak and the results are bad, so likely to start off 4.5% lower.
Yeah, in fact, on Friday session, the stock has also breached its medium to long term support, which was around 212. So I think the stock should head lower towards its consolidation low of 153, which was low seen in March 2016. So we could see further pressure again around 160-65 kind of levels in near term.
Raja, Ruchit, very quickly, 632, 3.5% higher, reaction to strong numbers. Will it withstand the overall weakness?
I think post a gap up opening, the follow-up move needs to be seen. 660 is the major resistance for the stock, whereas on the lower side the support is placed around 567. Overall, there is a low top, low bottom structure formation. So unless we see the stock going above 660, one should not buy into the stock.
The trade, Avinash, fundamentally, Amara Raja, what did you like the numbers enough to go out and log in?
Yeah, I think Neeraj, one good part is that they definitely benefited from softer commodity prices, and I think that was the result. We could see that despite a very flattish kind of top line growth, profitability was up. I would believe that somebody who has a long term view could definitely start nimbling here, because considering the fact that the company is a debt free kind of player, has a fairly good operating margin, and I would believe they have a decent exposure on the non-automotive segment also. They supply to the industrial sectors, especially railways and telecom. So I would believe that maybe in the near term the stock may not move up significantly, but at these levels most of the negatives have been factored into the price. So I think this is a good long-term bet, but yes, in the near term the stock could remain range bound. Nothing big expected, at least for the next 1 or 2 quarters.
Okay, got that. Avinash, thanks very much for taking out the time and being with us here on the show. But we've got just about 30 seconds left to go. Top calls quickly then. Ruchit, your top call for the day?
I would recommend going short on TVS Motor with stop loss above 410, expecting target around 470.
Okay, that's on TVS Motors. Brijesh, what about you?
I would go long on NMDC. We have seen good momentum in the Friday session. So at long around 114.5 to 115, keeping a strict stop loss of 113 and look for 119 on the upside.
Gentlemen, stay on. We'll take in opening thoughts from you, but the market is likely to start off 0.25% lower. So let's talk about the market open first. The Nifty Bank, the principal culprit, dragged lower by HDFC twins. I have no doubt about it. HDFC Bank would be the principal culprit here. 200 points off for the Nifty Bank. That's the main drag on the bourses as well. The mid caps and the small caps should come up on your screen. They too are starting off lower, especially the mid cap index down about 0.4%. Let's get the heat map up and let's look at HDFC Bank and Bajaj Finance, HDFC Bank. The reason why Bajaj Finance could be down is because HDFC Bank has sounded caution on unsecured borrowers. And if that's the case, Bajaj Finance too could come under pressure. Down 4% in Friday's session, by the way, Bajaj Finance. HDFC too down about 1%. There is weakness in Adani Ports and Cipla. But essentially these three, the Troika, the high quality NBFC or BFSI Troika is the one which is leading the indices lower in the session. Reliance is trying its best to counter that, but just about 1%. Nothing too special in Reliance numbers, and that's why you probably have this. So that's the long and short of it. It's some bit of green, but a lot of red. And the heavy duty ones are the ones which are correcting. When did you last see Bajaj Finance and HDFC Bank being the top two losers on the index on open? Frankly, I can't remember in a really long time. Maybe individually Bajaj Finance, but not the two of them together. Anyways, let's look at some other trend makers, some result reactions, some stocks which have not done well in the last few days. So the last 7 days, these guys have been the top losers. Each of them have corrected over 5% for now, are starting off okay. So autos are not starting off on a really bad footing today. They were amongst the worst performers in Friday's session and the last 1 week. What about some result reactions? What about some stocks which have been clobbered in the last few days? RBL Bank, another 4%. The shorts are in the system and they are not covering. Reliance Infra down another 1.5%, and Scient after that slam dunk in Friday's trade, another 4.5%. You reduce guidance or miss numbers, don't give guidance for Q2, and the market doesn't like it, and it's showing in the way Scient is cracking the session today. Speaking of mid-cap IT, just one very quick numbers, IT or mid-cap numbers which have not been all that great. L&T Technologies technology services, I think, came out with what was arguably a very poor quarter, and that stock too starts off 3.5% lower. Well, I have complete red detail, Devina, with the Bank Nifty being the principal culprit, down about 1%. What's standing out for you?
Well, some of the other results that came out, you highlighted L&T Tech. L&T Finance Holdings also is the other one that reported a poor set of numbers. Following that is Mahindra CIE, which the earnings came in below expectations. Profits were down about 9%, plus stocks down a heavy 7%. Amongst the stronger names, Amara Raja Batteries had a decent Q1. I believe the pre-open was in the positive, and so is the open, 1.2% higher. ICICI Lombard, Avanti Feeds is actually the top gainer on the Nifty 500. That stock's up about 5% right now, 5.5%. Then you've got the likes of Diwan Housing Finance, which sees some interest there, 2.5% higher. BF Utilities, 1.6% higher. The last 1 month, BF Utilities has gained almost 30%. You've got the likes of a JBF, which is up about 1%. Greaves Cotton, that's up 1%. Tata Motors DVR has moved up as well. Dabur is up about 0.5%. Stride Sassoon, Mindtree. Remember, Mindtree also had disappointing numbers, and the stock was beaten some bit of a rebound from those lows. And then you've got the likes of Biocon. Remember, Friday session saw a big, I think, knock of about 8% on Biocon. And then the likes of Reliance India, which is doing okay as well. But the mood is still negative. You have a bulk of the stocks at open in the red, 900 plus stocks which are trading in the red, with just under 300 stocks trading in the green. So the mood is extremely somber at open. We're in line with what Asia has done, but we've had days where we've actually closed in the opposite direction to open. I don't know if this is one of those days.
Bulls would be certainly hoping that, but Bank Nifty down 1%. Ruchit, Jain, opening thoughts from you. Bank Nifty or the Bajaj twins, either of these. One call on them.
I think Bank Nifty has certainly been an underperformer even during the pullback move during last week. And once that support of 30,330 was breached, we have seen this index showing a very sharp cut. As of now, if we look at the next support levels, then it is placed in the range of 29,280 to 29,200 zone. So I think maybe in today's trading session, we would see these levels getting tested. So at current levels, at least from an intraday perspective, the biasness would continue to remain on the negative side.
Brijesh, your opening thoughts?
I would go short on Nifty as it has breached the support of 11,385. So I would look for a target of 11,280 on the downside, and one can give a stop loss of 11,431.
Okay, gentlemen, we'll leave it at that. Thank you so very much for joining us. Appreciate you both
Thanks,
taking out the time this morning. Mr. S. Krishna Kumar, Chief Investment Officer of Equity at Sundaram Mutual Fund. He's joining us on the show. Mr. Kumar, thanks very much for taking out the time. A very volatile environment with regards to earnings, with regards to investor sentiment, with regards to stock price moves. How does one, what kind of solace does one take from what's been happening currently?
Yeah, I think if you look around you, I think there is a lot of negative data points that one can pick up, be it automotive sales, two-wheelers, four-wheelers, commercial vehicles, tractors, and slowing FMCG growth rates also. And you also see the credit growth slipping off, and the NBFC issues in terms of liquidity and stress continuing to haunt us. While these are, the situation we are in, the government has taken steps along with RBI to address the NBFC liquidity issue and try and provide more liquidity to them, bring down the cost of funding for the NBFCs and system in general, also try to give more confidence on the NBFC space. So all this would reduce also the credit spreads, and we should start to see cash moving across the system in the next couple of months. So coinciding with the festival season, you would see that data incrementally gets a lot better. If you also look at the last year, the economy started to slip sometime August, September. So we are probably in the last 1 or 2 months of a base effect, and then we would get the benefits of the base effect coming in from September. So we would then be a lot more, getting more positive data points. At the same time, also this automotive pre-buying should kick in sometime into the second half, which should also help the overall economy. The government spending has been little muted in the first quarter. I think with the budget behind us and the new government will get on with accelerating the project awards and project spends. So that should again restart a lot of the work on the infra side, which will have a fairly decent demand push across the economy. So I think all is not bad. I think if you do look at the next 6 months, you would find that we bottom out in terms of growth.
Krishna, good morning. Neeraj here.
Hi.
Wondering if you are perturbed with the commentary that is coming in from some of the marquee banking names, because that's not indicative of the stress just in their books, but the stress that could be there in the system at large. For HDFC Bank to sound off a bit concerned about the unsecured creditors book, RBL Bank referring to that as well in Friday's session. Is this a worrying sign at all?
So I think with some of these banks, it's been a more of one-off set of corporates who have slipped and they're showing up, and particularly with respect to the unsecured loan book and retail, I think some of the banks are definitely quite cautious at this point in time, more selective about whom they lend to. The retail growth in few of the banks has been slowing from Q4 and Q1. So I think definitely, the system is playing on its back foot. Given that they already have bad experience on the systemic stress, I think people are more cautious. At the same time, as I did mention, the budgetary provisions on securitization and first loss cover, these things are yet to kick in because RBI is yet to come out with a circular on operative guidelines. I think once that happens, 1 lakh crore of liquidity can come in, and along with that, the 1.34 lakh false CR liquidity is again going to be a boost. So that should provide succor, in my opinion, over the next 3 months.
Reckon, Krishna, then that you might be a buyer selectively. I'm not getting into what, but you might be a buyer over the course of the next couple of months if things improve, or would you reckon that you would rather, that a prudent investor could sit on the sidelines for the next few months, not invest anything even if it doesn't take out anything, because there might be better opportunities. The multiples might correct.
I think timing is always a difficult issue. If one tries to time the markets, I think you do lose the best days to buy. So I would continue to believe in doing a systematic investment into the markets. Try to get a good average in rather than trying to sit on the sidelines and timing the bottom of the market, which is very difficult. It's an elusive bottom. For all you know, it might actually be bottoming out as we speak.
Are you worried about the earnings performance and how we've kick-started Q1? And does that put a question mark to the full-year earnings projections?
Yeah, there are some downgrades in terms of growth in numbers. So we did start with the 26-27% earnings growth for FY20 about say 4-5 months back, and we probably are around to 20% or 18-20% kind of range. So I think this should stick for the year, sans any meltdown in the economy, which I think is it's not even that we should budget for. I think building in expectation of a recovery in growth into the second half of the year, I think we should be quite comfortable with 15 to 18% growth number. If it's even being conservative, I think a 15% number should hold definitely.
15%. So then, would that justify the 17 times multiple that some of these brokerages have been putting on Nifty targets towards the end of the year, when they say that Nifty could touch about 12,900 odd?
Yeah, I think, if you do go into the end of the year, you would basically discount an FY21 number, which would be 17-18% higher than the number of 600 for Nifty earnings of FY20. So I think if you do build in discounting on the FY21 numbers, you would get to a far higher Nifty targets basically. So all we are saying is that these are tough times and there are extraordinary provisions that one is taking on the books, and so you are seeing a lot of depressed earnings in many sectors still. So just going with the PE as an absolute number and looking at 16 or 17 times being expensive may not be the right view. But I think a lot more important is to see, is the economy getting back on track over the next 24 months? And if we do build in an 18% CAGR over the next 2 to 3 years, and then we should be fairly comfortable with the 16, 17 times PE number for the market multiple. Having said that, the broader market, even in the large cap stands at 10, 12 stocks, a lot of them are trading below, 14, 15 times. So also on the mid and small caps, you are seeing the indices are trading at about 14 and 13 times on a year ahead earnings. So there is a lot of correction that has happened. A lot of stocks are quite attractive. If you look at BSE 500 and look at all the mid and small caps, you would hardly find even a double dozen of them which are in positive return territory over a 2-year period. So I think that's the kind of meltdown we had in prices and readjustment of the valuations basically. So I think the markets are reasonably pricing in the current weakness and probably underpricing the growth forward.
By the way, the Nifty Bank as we speak is down about 1.5% at 29,341. The Nifty is down about 0.8% at 11,328. And keep in mind what is leading these downwards. Bajaj Finserv down 3.5%, Bajaj Finance 3.5%, HDFC Bank is down about 2.5%. Today, IndusInd Bank is down 2%. Today we have a bunch of these quality names which are correcting in the session. So please be mindful of that. Krishna, my only counter to that would be that hitherto in India, we've had these broader end of the spectrum stocks correcting not because the world economy or even albeit the Indian economy has really collapsed. Individual accidents, I mean, you could argue started with demonetization, the ASM framework, and then GST, and then the elections, and the NBA IL&FS issues, all of them domestic. We still haven't faced an international issue thus far. And while world markets are looking at substantially higher levels, what if they start to correct? Can this elusive small cap recovery get sidelined for a really long period of time?
I think what's happening globally in terms of softening growth in Europe and in US and the developed economies is actually quite positive for emerging markets. I think there's a clear differential of 2 to 3% on GDP growth across these economies and EMs, and clearly if central banks globally looking at data softening growth and low inflation currently, they are pumping in more liquidity. They are kind of looking to cut rates at this point in time. So these are situations which are very conducive for growth stimulus in the emerging markets. The central banks here will have a lot more leeway to go aggressively and cut interest rates because the currency is not going to take a knock because globally there is liquidity and rates are softening. So to the extent I think our real interest rates are still quite high, and there is a case to cut by 50 to 75 basis points on the repo and also try to bring down the credit spreads in the market. So I think cost of capital will come down, and that will be a major trigger for markets to kind of bounce off from the lows.
Okay. All right, Mr. Kumar, we'll leave it at that. Thank you so very much for joining us this morning. It was a great pleasure chatting with you.
Thank you.
And the markets for themselves crumbling as we speak, almost down 1% now for the Nifty 50. Could actually challenge the 11,300 mark also if we continue this glide.
Yep, let's cross fingers for whatever Krishna said turning out to be true, by the way. We slip into a break. On the other side of the break, National Housing Banks has asked some financiers to desist from funding subvention schemes. We discuss the likely impact of the directive on both real estate companies and the NBFCs which lend, with Yashpal Gupta of Recom Finance, and decode the June quarter earnings with Dinanath Dubashi of L&T Finance.